Yo, what's up, guys? It's your boy Looney, and crypto was up today. Some shorts got wiped out, and the markets are buzzing. But we've got a big event coming tomorrow, and that is the Federal Open Market Committee, or FOMC, meeting. So before you think we're back, I'm being careful, and this could be a fake pump. So let's walk through what's going on, what I'm personally doing, and why I'm staying cautious. Before we get into this video, quick shout out to the Discord. It is free to join, and I also offer a premium membership for $8 a month where you get access to one-on-one coaching, trade callouts. I have an option selling course. I do giveaways and more. You can check it out. All the links are down below, along with the referral link to Moomoo if you want to check that out as well. So let's first shift to crypto. Now, I own some crypto. I don't promote it as much on this channel just because it is a very volatile stock, and my strategy is very simple. I just dollar cost average. I put money in every day into Bitcoin, Ethereum, Doge, and a few others. But we did see some liquidations from the shorts. People are still leveraged. I stay away from leverage. That's not what I like to do. But for others, it has been a mess. We're seeing the longs get liquidated, the shorts get liquidated, and it's been pretty insane moves. And it's actually made crypto even more volatile at times. Now, on the day we are up, and my portfolio, I'm actually down still 10%. So although we have this one day of green, I'm not going to say that we're back and all that. So Bitcoin did actually do pretty well. I mean, it's up to 92K. I think there's some support levels, I think around 93K. Again, I don't really look at the technicals too much just because I buy every day and I don't have some kind of trades going on with it. So overall, I don't care too much day to day where Bitcoin is at and all that. But an interesting thing that I am doing is I am now staking some of my Ethereum. It has allowed me to do that. So I've staked all of my Ethereum, or all that I had available at the time, and I believe it earns interest. This is sort of new to me as well, but I'm under the impression that it earns interest, and then you get to collect that interest. Now, it's not a lot. It's only 2%, but it is worth noting that I am staking it, showing that I'm not looking to sell in the near term. So that's what's going on with crypto. I also own some crypto mining stocks, so those ones are pretty volatile as well. But this is why I don't want to get ahead of myself, because the FOMC decision can change everything. It's pretty much priced in that we're going to see rate cuts. There's actually prediction markets on Robinhood itself. I had a trade going on, and I bet that they would cut rates, and I ended up selling it. I don't know why. I guess I had a little bit of a panic sell in that scenario. So we could actually pull it up really quickly. And yeah, we have the Fed decision. They're most likely going to cut based on the prediction market of about 96%. They're going to do it. Now, that's not the important part. Really, it's what comes after that. And then that's when Powell speaks. And we're hoping, or the bulls are hoping, that it is dovish. And dovish, that means that going ahead, there is room for more rate cuts. So is that going to happen? Is it going to be hawkish, which is, on the other hand, where they're very worried about cutting rates too soon, and they're just cautious all around about cutting rates. And often when that happens, the market kind of sells off. And we saw that last rate cut in October. They said that they don't want to rush into cutting rates without all the data because the government was closed down. And they basically said it was like driving in fog. So last Fed's decision wasn't good. It was very hawkish and it sold off. But this time around, I'm not too sure what Powell's going to say afterwards. But that's really what is important. It's not really the rate decision because that's already priced in at the moment. And that's why I'm not overextending, because if you overextend or chase now, you're riding this momentum in a very fragile environment. So I'm staying away from it, especially with how unpredictable the market has been, and even just crypto all around. I would stay away from leverage. So I am being cautiously bullish, but I'm not betting heavy on this move. So what am I actually doing? So today, I didn't make any trades. I really just closed a few trades. So a few of them was a covered call on SoFi. So let me actually pull that one up. I could actually go to my options and then my realized loss and profit. So this week I'm up $500, and then on the month I'm up almost $2,000. But a lot of it came from SoFi. I closed this covered call that I had running on it, and I gained a $400 gain on this, up 88%. So that's good, but also SoFi, on the other hand, has been struggling. It has been selling off due to its dilution and its just overall situation, and it's just been selling off. So I'm not too concerned. I'm very long-term on SoFi. It's actually good for the position I was in. I'm pretty heavy on the covered calls. So on my side, I'm not too worried that it is selling off, and we'll see. We'll see what happens when the next S&P 500 decision comes. I believe it comes every quarter, and it's like the first week before, or I'm not entirely sure when it is, but I think it's every quarter near the quarter end or quarter beginning, somewhere around there. I think it's in the month, the first Monday or first week of whenever the quarter ends. So that's what happened with SoFi. Another thing that I did close is I closed a credit spread on IBIT. I don't do credit spreads too often, but this stock's pretty expensive. So instead of selling a cash secured put, I did a credit spread where you use a fraction of the price or the collateral, and it's defined risk. So it's a little bit more risky and a little bit more management and a little bit more difficult, but at the same time, I was comfortable doing this trade. So I profited around 50%. I'm up $21 from it. So that's where that $21 came from, is from this IBIT put credit spread. Now, something else that I actually closed is Mara. If you guys don't know, I have a lot of trades on Mara, and I closed one early just because it was pretty much up all time. Or it was pretty much up 100%. So I just closed it early. And if we go to Mara had an okay day. It's really struggling, to be honest. It's getting a lot of sell pressure. And on the day, it's only up 1%. So I have a bunch of put credit or cash secured puts open on this stock, and I am just managing them, not really doubling down. There's no need. There's not a lot of volatility at the moment, so there's no need to sell more cash secured puts. But I did close one early. And overall, I'm just simply dollar cost averaging. I'm not overcomplicating this thing. I think I did sell a covered call on Webull recently. Webull actually did a really good today. It was up pretty significant, up around 5%. So I jumped the gun, but it is what it is. I don't know if I want to hold this long term. So I'm kind of comfortable if the stock goes to 12 or 12 and a half and then sell off these shares at my strike prices of covered calls. So overall, I might have jumped the gun, but it's fine. And on that, just dollar cost averaging. I'm dollar cost averaging into crypto. So although I am bullish and I'm hoping that crypto goes up, at the same time, dollar cost averaging works when it doesn't go up. So at the same time, I am happy that it's going up, but also I'd be okay if we did see some sort of sell-off or sideways action. And then again, I have that Ethereum staking that I just started. And I'm also dollar cost averaging into Robinhood, the stock. But I did want to highlight that because I'm avoiding the over leverage or just the emotion reaction to all of this. And yes, I am excited about this green candle or this green day, but at the same time, we all should know what happens. I mean, green days are great, but next thing you know, all the gains are sort of returned. And that's why I like selling covered calls and doing all these selling options, because you could at least collect income even if the market moves sideways. So even though it moves up and then down, it's net pretty much even, and therefore you'll make money on both sides. So that's why I like selling options. You can make money in any sort of environment or any sort of situation, and then the dollar cost averaging combining with that. So what I'm watching closely is the FOMC meeting tomorrow. It's pretty priced in that they're going to cut rates, but it's more important what Jerome Powell has to comment or his statements after he talks about, or after they have their rate decision and just kind of the plans moving forward. And then curious to see how the market reacts. Crypto doesn't really need to react on news, to be honest. It kind of does its own thing. I saw some content today where people were saying, why did crypto pump on no news? I mean, it works the same way. The crypto dumps on no news. So yes, the news is important to crypto, but at the same time, crypto kind of does what it wants, and it's more about liquidity and just the risk-on environment, which it does benefit from rate cuts. Now, for myself, not making major moves, not adding leverage. I'm simply just dollar cost averaging and maybe even reducing some exposure with Webull or selling off some shares. And if we do get a dovish surprise, that'd be really interesting. The market should react well, and it could feel like a rally. But on the other hand, if we see a hawkish or some kind of disappointment, you could see a drop pretty hard. And there are some data saying that dropping rates near all-time highs is actually beneficial in the long term. There's some graphs and tables about that, so that is worth noting, and for the long term at least. But Yeah, crypto is green, but I am far from convinced that we're officially back, as they say, because this could be a fake pump. And if you're trading or holding, I would just say be smart. This isn't financial advice, but for me personally, I'm not over leveraging. I'm not chasing hype. I'm using dollar cost averaging, and I'm not having some kind of emotional trade. And I'm treating tomorrow's FOMC meeting as a potential volatility trigger. Maybe I'll sell puts tomorrow, but that's how you turn in uncertainty into opportunity, is selling puts or selling options in volatile markets, or at least protect yourself from the downside by doing covered calls. So if you enjoyed this video, don't forget to like, subscribe, and let me know in the comments how you're positioned for the meeting tomorrow. Until next time, peace.